I am going to in just one moment. But the only problem you
Fix
have
your hair,
the
Corey.
do you have the link to the PowerPoint, or is it shared on live already? You want to just screen share?
Yeah, just gonna drop. Probably easier to screen share,
Yeah,
but
and then I can set it up so that it goes where it's supposed to go. And just let me know when you need the screen share, and I will switch it over. I love tech. It works wonders when it works. So
When it works.
yeah, luckily we've been testing things all day, and I've been working at all the kinks and getting it done.
Can you see it? We got it pulled up.
All right.
So I found out today I had an affiliate link for promoting the event. I just been sharing the Facebook group. Yeah, I have no idea.
It's all good. It's all good. Corey sent it out this last night. I'm pretty sure you used your affiliate link, right, Corey? And it got some signups, so we're good.
Yeah, we sent it out to our. That's how I found out we had an affiliate link, because I saw Corey sent the link in our student chat, and I was like, oh, we have an affiliate link. Yeah, and I was like, dang it. Okay, I wasn't aware. Sorry, but I did share it on socials. The event anyway.
All right.
All good. All good.
We are ready. I don't have the PowerPoint up and running yet. It's taken a while to load for some reason. But I don't think that should stop us from being on time or pretty close to on time. So I'll go live, and then I'll just send a message to the chat once it is going. Unfortunately, don't do that to me.
I'm currently screen sharing it. You want me to just keep screen sharing?
Perfect. That's what I was looking for. Excellent. So I'm just going to take everything.
I think that's a
off
yes,
here.
Corey.
Yes, please. Yeah.
Cool.
And I'm going to try one quick test to make sure that did work. So that is.
You got your water, Danielle?
I do, and my hot water and honey too.
Right. So I can go from there. Now that's a jug. You have to drink one of those every day, right?
That's insane.
All right, we're good. All right, ready?
Let's go.
Yep.
All right, just loading. I'll start it off. Gotta love when Facebook takes its time with loading. We're just waiting for that countdown. If you're watching this already, then we will try that again, because I just got kicked out. All right, gotta love when Facebook is loading. Just in case you're watching this video, I don't know yet, but that's okay. Let's see what we can do. Marilyn, if you can check in the background, make sure that this is working, because its video won't go live at the moment. It's saying live video is starting, and then I keep getting kicked out. One more time. Thank you for letting me know. It's not going in. I keep getting the boot.
I'll try to do something on my side.
Okay. It's not. I'm gonna have to restart completely. So I'm just going to go back and restart the whole thing. Go live.
Looks like we're live now.
No.
Yep.
Are we live? All right. I'm not sure why, because it still says we're loading. But welcome everybody. Gotta love when tech challenges kick into play. So, welcome everybody. We're here for the strategies for 2024, 2025. We have some amazing guests, phenomenal presenters, and more importantly, experts in their industry here to share their information with you. So, before we jump into it, how about we take a moment and introduce each of ourselves? Corey, do you mind starting? Who are you? Why are you here? And how can you help our wonderful viewers?
Wow, put us on the spot here. I thought you guys were going to introduce yourselves first. No, Corey McKinnon from Sarnia, Ontario. Been investing for a couple decades. Started off just doing the BRRRR before it was even called the BRRRR. I had a corporate job and just kind of realized that I was helping to feed somebody else's dream by working in that job, not even 9 to 5, but 9 to 10 o'clock every day. So saw real estate as a way to escape and leveled up my portfolio to the point where after 6-7 years, I was able to give in my resignation notice. And, really since then, just been helping other people on their path and on their journey too. So I'm a father of 4 and just really love to educate people and pour back into the market, especially during times like this when people aren't really sure what to do. So that's a bit about me, gang.
Excellent. Thank you. How about yourself, Danielle?
Love it. Daniel.
Thanks, and thank you for that great introduction. My name is Danielle Chason. I've been a real estate investor for over, I hate to admit this, but for over 20 years. That's 2 decades. And I started off as an amateur investor. I think a lot of people do that. So an amateur investor, AKA landlord. And in 2013 was when I started educating myself on real estate strategies. And at the time, there wasn't a lot of education here. So I went down in the States and I really did an intensive study for 2 years with a group down there. And then I came home and then I started applying those principles. And that's when I went from an amateur investor to a sophisticated investor. Much like Corey, though, I started before BRRRR was a BRRRR thing. I did conversions before conversions were a thing. And also I did house hacking before I think that word was, because my very first property that I bought 2 homes. I was house hacking them both. And one I lived in and I rented out the basement. The other one I rented out 2 separate units up and down, and illegally. Don't do that. And and then I just haven't stopped since. So I was a landlord for a decade, and now I've been an investor for over a decade. So that's kind of encompassing. And my journey has taken me all over the place, such as a lot of investors will experience when you're finding your feet on this journey. And so I've done JVs, I've done conversions, I've done multi-units, I've done single family home, and just always learning and growing and pouring into the community. So just like Corey and I now work very closely together in our community to coach our people and help them on their journeys. And he does it with his company, Infinite Results, and I do it with mine, Strategic Success Consulting. And here we are, just continuing on that journey.
Well, thank you.
Awesome.
Go ahead, Zach. Who are you?
Yeah, Zach Hale here, the founder of the Real Estate Hub. I want to tell the viewers that I've known Corey and Danielle for many years now, and I'm super excited to have them on this call. I see there is some of you guys tuning in, so why don't you guys drop in the chat box where you're tuning in from. I see Darren just joined us. Marshall just joined us. So as I said, my name's Zach Hale. I've been investing since 2017, not quite a decade there, but a couple of things I heard from both Corey's and Danielle's introduction is this is definitely a marathon and not a sprint. I think combined doing it for 20 plus years, definitely impressive. So it's great to have you guys on the call. And I'm looking forward to seeing where this presentation is going and seeing what golden nuggets I can get out of it. That's for sure. Jason, why don't you go ahead and introduce yourself and we'll get into this.
Well, thank you very much. Appreciate it. I'm actually the oddball out. My starting is in a whole different realm. You probably even hear my accent. If I keep a short story, I was actually deaf as a child. Couldn't hear, couldn't speak, fell in love with magic. That's right, card tricks. Mess with your mind. Became a professional magician for 20 years, traveling around the world. Built agencies for magicians, jugglers, unicyclists, fire performers. Got into business coaching, inspirational speaking. My asset class has always been building businesses and turning businesses into an asset and not a job. Now, just like all of us, COVID hit, everything changed and all my corporations closed. Went from lots of income to zero. And at that time, my one and only lonely rental property gave me a notice that he was leaving. So I literally rushed back from Germany just in time to get through the border to find out that all the businesses are now gone. I had about $100,000 in deposits and non-refundable deposits. I was like, yeah, I need money. And it's like, okay, so what am I going to do? So I made the shift. Luckily, me and Zach had been working together. He'd been a great client at the time. And it was like, you know what? I think time to put the speed into gear, get everything into gear, and start taking that investments of businesses to the next level and apply what I know about business and building the business as an asset and start applying it from a different angle in real estate. Since then, obviously, through what we've done together, we have 80 or so doors purchases in the last few years. We have a 92% success rate. I specialize more in the area of rent to own than any of the other strategies. Personally, that's the one I like, with multifamilies and other purchases as well. I only do a couple burrs. I try to stay away from that. So I look forward to hearing your tidbits on it, because there's clearly something I don't know. But most importantly, it's about putting yourself in the room with other like-minded individuals who are masters at their knowledge, masters at their skill, and have real-world experience in it. And so I've been just going gung-ho for the last 4 years, I guess it is, making sure I earn my right to catch up and earn that spot. That's myself. All right. So with that being said, how about we just start with how you got started in real estate? Who wants to share? How did you get started in real estate?
I can jump in first.
Sure.
Yeah, Corey, take it away.
Yeah, I think similar to Danielle, I started off with a house hack, but I decided to do that with a sixplex. But exposed to real estate even at a young age. I grew up in a duplex, so I just thought that was normal to share your house with other people. We had a little old lady that lived upstairs, and my dad got $75 a month from her, which was still way under market value. But it just showed me how to be an entrepreneur, how to be entrepreneurial, how to stretch a dollar, what to do if you weren't making a whole lot of dollars when you're young. So that's how I got started, but didn't buy my first one till I was like 30. And but a lot of people in my life were house hacking or, doing the wealthy barber approach with another unit in their house and stuff. So that's how I got started. My best friend's dad was a realtor when I was young too. So I think I actually went on my first property tour when I was 15. I convinced the agent that I was 18 and old enough to actually look at a property. So that's my story.
Awesome. How about yourself, Danielle?
Yeah, so I kind of touched on it a little bit in my intro. I literally bought 2 houses kind of under the radar as a first-time home buyer out in Alberta. And I did that with my best friend at the time. And we made sure that, and it was one of my non-negotiables when we were shopping with the realtor, was to have it so that I could have a separate suite downstairs. And then that way I could rent out. And that's the illegal part, because they weren't legal suites at the time. And I knew nothing. I didn't know kind of what liability that was exposing myself to, which is why you shouldn't do it, guys. But ultimately it got me in the game. And so we bought 2. So her and I actually lived in one on the main floor, and then we rented the basement of that one. And then the other one, we rented upstairs and downstairs and covered our mortgages that way. So that was kind of how I got in the game. And then after that, I thought I had it figured out. So then I just started buying, old school way, buy a property and then, get some equity and buy another property. And then was just building it that way until, again, in 2013, I'm like, oh, well, let me try flipping and doing this as a career and seeing what I can do with this. And then paid for some coaching, some very expensive coaching, but I would never take it back in a heartbeat because it got me to where I am today. And the thing about knowledge, and what I loved about with my coach, was everything that he gave me. You can't undo knowledge. Like when you're learning something, you can't undo it. So kudos to everybody who's on this call watching the live, because everything you're going to learn stack with the other things that you're going to learn and what you're feeding your brain. And that is going to be what makes you great moving forward. So anyhow, I got some coaching, learned how to flip, learned how to run a business, learned how to raise capital. I mean, the coach that I had just covered everything. And then I came home and then started doing that. So I was flipping, didn't listen to my coach out of the gate. And he said when you're flipping, you want to stay 30-minute radius from where you live. And so I'm on the west side of the GTA, and I thought, okay, that's great, but the numbers are really good. And so my first flip was in Port Hope, which is 2 hours from where I live. And the second flip, ironically enough, I didn't know Corey at the time, but was in Sarnia, which is 2.5 hours from where I live. And I learned very quickly that I was wasting a lot of time on the road. So then I focused more in my area. After that, I found a market, vetted a market, found a market that worked for me. And then I focused on that and did that successfully for a number of years. And then I pivoted and I went into multifamily acquisition. So that's kind of how I got started, though, was really through the house hacking and, bringing in tenants. And in fact, one of the properties wasn't designed as a separate unit. And so, we ended up kind of renovating that. So a bit of a burr there and a bit of a lift on that. So that's kind of how I got started, and I haven't looked back since.
So it definitely
Well
sounds like
done.
there's a wealth of experience here. So you were saying something there, Zach?
Yeah, I was just saying, well done. And it sounds like both of you as well started with the house hacking. Unfortunately, my wife wasn't as favorable of that, so we did a 6 unit as the first one, but I was like, let's move in here, but she wasn't having that. So, but yeah, I think on the Real Estate Hub has definitely heard my introduction before, so I won't bore you guys with that. And I think Corey as well, you didn't mention this, but you were in bodybuilding and weightlifting, were you not? Like,
Yeah, so at the age of 13, I started lifting weights properly. So like how they do it in the Olympic style weightlifting. Did that for 13 years. Took it to the national level and international level. Went to the Olympic Games trials for Sydney in 2000. Didn't make the team, but it was just so cool to be in the mix and to compete at a high level. And when you do something like that and you dedicate your life to whether it's a sport or a career, those are totally applicable in business and to growing your portfolio, right? So doing hard things, like there was no workout that was ever really easy when you're training at that level. So looking back, it really was great to, as well as work ethic too. I always had a couple jobs on the go. Frankly, I get bored if I'm not working. So all those things are very applicable to success in life, I find.
Would you agree?
100%. And
Yeah, go ahead.
go ahead, Jason.
I was just gonna say, would you agree? Because I'm just thinking the bodybuilding and the weight training and the mindset you would need for that, the discipline, the level of commitment to knowledge, and every day. Yeah, it probably worked for a few weeks, and then all of a sudden hit a plateau, and you got to adjust. But doesn't that sound an awful lot like real estate or relationships or insert goal here? Like I think what you were talking about there is transferable to almost every area of life, especially real estate.
Yeah, most of the times things don't go your way. I can probably count on my fingers like the number of times where I had an amazing, competition, and there's a lot of just pretty good ones where you're like 90-95% of your best, but you just got to keep showing up and expect things not to go your way and be able to adapt and pivot and adjust the weight or whatever it might be that day, adjust your approach, adjust your technique or your strategy. So life is always moving ahead, gang. And if you're not moving ahead with it, if you're not keeping up, you're actually falling behind. So
For sure.
And ironically enough, Jason, it's funny because the most successful people that we see that get there a lot quicker are people that have training either in the military or in sports. And that's because they've got structure and they've got discipline. They've just been wired that way because people that are in sports, and Corey was in sports when he was really young. I think, Corey, you were 13 when you started weightlifting or powerlifting, right? And so like it becomes habit. And so it's really hard for people who don't have that structure or that habit later on in life to be entrepreneurs. They struggle a little bit because getting up in the morning, you're not held accountable to anybody except you're the only one holding yourself accountable. And that's really hard for people. So it's a lot easier to lollygall or to sleep in or to, do something else instead of getting the work done. And I think with the military training or the sport training, having that high level of structure at a young age really molds for success.
Yeah, without a doubt, like I wouldn't be here for where I was without getting that coaching and mentorship, and I'm sure that's the same for many of you guys. And I totally agree. Like like I heard long ago that it's almost like the people that are really going to succeed is the ability for them to be coached. Like how coachable are you? And you can really measure that by what's your willingness to learn and what's your willingness to change? Because a lot of people just like to learn, but not necessarily want to change their habits, right? So, but yeah, we can definitely get into the kind of the meat and potatoes. And as we're getting through this, guys, feel free to drop any questions in the chat box. I see Chandra just asked, what's the meaning of house hacking?
Yeah.
Simply put, 10-second answer. That's when you kind of eliminate your biggest expense. So as a, person on this planet, your biggest expense is your living, like your living expenses, right? Paying for your mortgage or paying for your rent. With a house hacking, let's say you're living in a 6-unit apartment, to use Corey's example. Corey, you're probably living in one of the units, and the other 5 units were actually rentals. So Corey was essentially living for free or potentially even making an income off of his. So you can really lower your living expenses, and it helps snowball real estate. But on that note, like, let's get into this, guys. Like, what's going on right now in the market on your side, Corey and Danielle? Like, what are you guys seeing in the market? So, because really, guys, as we're getting through this presentation, we want to discuss the market, the strategies, what strategies are working right now, what are the steps that you guys can take to either enter in the market or re-enter and really get you guys to the next level. Okay. So Corey, starting off, like, what type of market trends are you guys seeing right now in real estate?
Well, as everybody knows, maybe we'll start off with the obvious, right? I mean, the market was getting so overheated and frothy, and just some of the prices that were happening in the past couple of years, it wasn't sustainable. And rightfully so, they started increasing interest rates, and then things have slowly started to come down, which has caused a lot of people to sit on the sidelines. So I really commend everybody that's here today, because you want to learn. And just like what Zach was saying, though, you can't just learn and not apply anything, because there are actually great opportunities out there. So I do find that we're finding the bottom in a lot of different markets right now. But there's a lot of money, and there's a lot of people sitting on the sidelines. There's a lot of people prepping their properties to maybe sell come this spring. So I'm happy that interest rates are coming down these days, but it's just unfortunate that it's really shattered what I think is one of the best industries to be in, and it really drives our economy. And even at this time, there's still great deals out there. You guys are still transacting. Our clients are still transacting. Students in our network and in this network are still transacting, I'm sure. But obviously, it's made a lot more people cautious, and to really make sure that they're doing their numbers properly, that they actually pencil out, and that they've actually budgeted in for higher interest rates. That's one thing that my coach about 12 years ago really hammered into my head, because he'd actually gone insolvent before. He's like, Corey, you always have to budget in case interest rates go up by a point or two. I'm like, really? Like a full point or two? He's like, yes. And what happened? They went up by more than that. So I was okay, but not everybody was okay. So we're also seeing a lot of pain and fear in the market right now too. I'll let Danielle jump in there as well.
Yeah, and it's exactly that. I just wanted to talk about that pain and that distress that's in the market right now. A lot of people got very complacent as the market was getting heated, and we were in a long stretch, as you guys know, where we were doing really good. And then people kind of got a little complacent and started taking some risks, and were not prepared, to Corey's point, for the market to turn. And it's really important that you understand where we are in the real estate economic cycle when you're picking a strategy, so that you can pick the strategy that works in that cycle, in that phase that you're in, and the phase that we're going to be going into. And when the rates were so low and the prices were so high, and we knew that it was hot. The market was hot. I mean, we've never had seen, at least here in the GTA, such a hot market where it was double-digit annual appreciation. The interest rates were so low, like it was hot, and there's nowhere to go but down at that point, right? The interest, and so you got to kind of anticipate that to happen and be prepared for that. Now, it's hard to speculate and know when that's going to happen, but always be prepared for the next stage in the real estate economic cycle. And that's what we want to introduce to everyone here tonight.
I know I'm, for one, been very interested in hearing what that is. So I know I did want to comment though, because you were mentioning on, being able to build in that 1% to 2%, build into the buffer. And one thing I've noticed an awful lot between those who are successful, versus those who don't, and it kind of ties back into that whole word of discipline we were talking about before, is knowing the numbers. It blows me away how many investors really do not know the numbers at all. And when you ask them about it, they go, well, I'm not really good with that part of it. And I think it comes down to that core function. If you're going to understand the market trends, if you're going to be able to predict where it's going or see what's coming up, or build into exit strategies or buffer into those plans, you really have to understand, one, what is the market trends, what are the potential opportunities or risks, but you also need to build into that strategy of yours how to mitigate that risk, or what are you going to do if in the event, the bottom falls out and interest rates go up 2%. What's your plan there? How does that work on your numbers? Do the numbers still work? What is your trigger that identifies when it's starting to get to that point where you've got to start making some hard decisions? That way you're not waiting until it's too late and then finding out, oh, if only I decided 6 months ago that I did insert solution here. But that's kind of what I was noticing is the market seems to have shifted where those who didn't really do the proper due diligence are scared and sitting on the sidelines, and those who know what they're doing or have done the work are loving the time right now. Like, that's
yeah. So I think Jason, with that, people who are like, when we get into real estate investing, you're just so into the strategy and doing the work yourself. You're out in the field, right? And then it's hard to balance the front end and the back end of your office, right? The front end being out in the field, and then the back end, the administrative side. And when you're in a hot market, you can be all wrong in your numbers and the market is going to fix it for you, right? Because we're just appreciating so much. You run out of money, you just do a quick refi, you pull some cash out, and so people really haven't been held accountable to not knowing their numbers or even maintaining their back office of their business. And really, they're not even looking at it as running a business, and you really, really should. And I think that's a big, big mindset shift for people, is like, don't look at this as a side hustle. This is a business. You are a housing provider. You have a big asset. You have income coming in, and you need to manage it as such. And so once people make that shift, then they really start looking at it differently. And as a real estate investor, there's two things you need to be doing. You need to be limiting liability and reducing risk. Always, always, always. And when you're doing that, you're protecting everybody in your organization. People are like, Danielle, what is the biggest, like the most important job that you do? It's like limiting liability, reducing risk. Because if I do that and I protect my investors, then I'm protecting everybody in my ecosystem, right?
Yeah. Well, you saw how many people just like lost it all in the last few years because they didn't, have a good grasp on that. I know for me, like one of the keys to that has actually been like finding people that are good what I'm like not at. Like, for example, with myself and Jason working together on rent to own, and then my team in Sudbury, like I have two business partners, John and Brett, who are boots on the ground, hustling the deals, managing the construction. And then I'm the one actually running the back office and raising the capital and limiting the liability and paying down lenders and getting better finances. So for me, I've always had the analogy of just time in the market. So when the market was going up, like we continue to buy. When the market was going down, we continue to buy. Yes, some of our flips lost some money because we bought some properties in January and February, and by the time they closed, there was no spreads. But that's just gonna be part of the business. You're gonna win, you're gonna lose. So for me, it's just been time in the market, limiting liability. And now, honestly, more than ever before, those deals we bought a year ago are extremely paying off. Like we're just getting, like, I think I just got a mortgage commitment right now from CMHC for like 5% at a 40-year amortization. So like the stuff that I thought, it's been worth it just to keep pushing and having the mindset that you're going to get through it. And, the people that are in the market and pushing towards it and limiting liability, they're the ones that are going to, definitely make it to the top. So yeah, it's been good. Did you guys have that graphic too, Danielle, or Corey, that you guys wanted to share about the market cycles? Did you guys want to share that?
Yeah, so Corey will flip over to that graphic here, and maybe Jason can pull it up. There's just a bunch of slides here we already covered. So yeah, so this is just a slide to understand the 4 phases of the real estate economic cycle. So you have the recovery, you have the expansion, then there's hyper supply, and then recession. And personally, like these are terms that have been coined by somebody else. We're just sharing it here with you guys. But ultimately, like the recession doesn't need to be in the recession that you think like the Great Depression or anything like that. Just a recessionary state. So if you think of that, right? I don't want to get into the conversation that right now we're in a recession. We're not. That's a whole different conversation for another day. We just want to talk about strategies today, right? So understanding the real estate cycle, though, really will help you decide what is the best strategy to go into so that you are limiting that risk, right? And so real quick here, obviously the recovery phase, that's the phase that we're going into. So understanding that. So now interest rates will start going down, right? You're going to have some confidence starting coming back into the market. So people are going to start kind of jobs, unemployment should start coming down. So people have more jobs, more discretionary spending. And so then you go into the expansion phase where it's like, okay, now builders are like, hey, this is working. So let's go out, buy some land. The interest rates are low. So now the deals are penciling out, and then they're going to start putting units into the market. And now all of a sudden people are starting to make money. So it's like everybody's happy. So, just confidence starts really building. And then all of a sudden, all of those units start hitting the market. And now there's a flood. Now, granted, we're in the Toronto area here, and we have a lot of immigration. So that doesn't necessarily always happen with the bust from the builders. It's more of an economic thing. But essentially, all of a sudden, after 5, 7, 10 years into the cycle, you have that bust because all of the supply is hitting the market, and that saturates the market. That's happening with condos, right? So what happens is now you get into that hyper supply phase. You got inflation, interest rates start going up. The numbers aren't penciling out. So now you're in that hyper supply phase and starts going into that recessionary state. And when you're in that recessionary state, everybody just tightens up. Going into hyper supply, you can't get funding. It's hard to leverage capital, right? Interest rates are really high. The deals aren't really necessarily penciling out. Rentals also get affected by that. Rental rates might drop. Vacancies are going to go up. And then you get into that recessionary state. Now, where we are in the market right now in this cycle is subjective. You can look at it. I'm going to see it differently than any one of you guys maybe, but I think we're kind of in the same space. So I personally think that we're kind of in that recessionary state and maybe on the cusp of coming into that recovery state, which, by the way, if you look at that, is a great time to buy because interest rates are going to start dropping. Property prices have dropped. We're kind of in the low. So now's the time to really go in. So the question is, what strategies work in which in which phase, right? Corey, is there anything that you wanted to jump in here on?
Yeah, I think it's, again, so many people are visual learners. That's why we wanted to make this graphic. And it's just like anything, everybody. What happens with the forest when it gets, a little bit too overgrown, a little bit too dry, because it's, some of the trees aren't getting water, right? There's going to be a bit of a fire, and then it's just a natural cleansing. Right now we're seeing savings rates going up, which is a good thing because, in the last cycle, there wasn't savings rates, right? And this happens just time after time after time. We can't have a flat, no change kind of an economy. It's just not how the world, not how life works. So this is normal, and we will get through this here as well. And like Daniel was saying, I think there's huge opportunity right now. There's been opportunities in every single phase. And when people actually know how to go out and find deals, how to underwrite deals, how to act quickly, how to raise capital, all these different things that people on this call have done before, you can capitalize, right? I capitalized during COVID. I capitalized after COVID. I'm going to be capitalizing, in the next phases here as well. So, but let's take a look at the different, all the different strategies that there are out there.
For sure.
This
Corey,
is why.
can I say one thing before you jump in there? Because I think too, like, there are some like outside factors. I also agree that we're in the recession, and we had a event, Corey, with one of the speakers that we saw at your event. He came to the Real Estate Hub, Dwayne Roy, and this was 3 or 4 months ago, and we called a recession. We called all these rates hikes, and like people were saying, like, all this other stuff. So literally following this is you can almost have that crystal ball. Now there's some outside factors like, immigration and GDP and, COVID and, affordability that could come into play here. But for the most part, like, you just understanding this can, really make you a lot of money in real estate and really limit your risk. Like, this is massive. So just wanted to
think about it. Think about it, Zach. Like, honestly, when we were going into, so COVID, like COVID messed everything up. COVID really was one of the things that really launched inflation and stuff too. But again, we're not here to talk about the economy, just focusing on the real estate cycle. When COVID happened and that there was this huge like blow up in the real estate market, then all of a sudden people started, like the experienced investors started seeing the writing on the wall. They started listening to the economists like, hey, inflation is going up, rates are going to start going up, interest rates are. And so what they ended up doing is that's when they're pivoting. They're like, okay, you know what? Now's the time for me to sell. The market is hot. We're at the top of the market. If they start raising interest rates and inflation is going up, well, that's going to really shift and we're going to go into that recessionary state. And so what they did was they started liquidating some of their assets so that they could pull out that money at the top of the market and then reinvest it back in at the bottom of the market. And that's where you can really, really get some deals, right? And in the interim, you'll see, because now we have another graphic for you where we show you the different strategies and where they fit in each phase of the market. And one of the strategies is private lending. So when you liquidate all these assets, and it's really a scary place right now because you know that your cash flow is going to dry up, your debt service is going to go up. And so what happens is now they've decided to start private lending, because I know I can control how much money I'm making when I'm private lending. And right now the economy is going in a state that is not in my control and it's not going the way I want. So really understanding the cycle and what part of the cycle that you're in is going to help you kind of mitigate some of that risk, right?
Love it.
And when
That
we
sounds
talk about
amazing.
real estate being a shiny industry, look at all these different strategies here. Some of them are a little more, I don't want to call them basic because nothing really here is basic, but the ones on the left are a little more entry level or things that you can level up into. And then most of the ones on the right here are ones that you would want to maybe go into second once you've cut your teeth and you got some more experience. And that might be something worth taking a screenshot of, or there's actually a way that people can actually grab a copy of these slides if you ever want these for your own use or anything like that. But here's that infographic that Danielle was talking about. So what works in the different phases here? Some people might think there's nothing that's going to work in a recessionary or suppressed market, but there's actually lots of different things that'll work.
So I think this is interesting because, like I said at the beginning, my background is more in building businesses. And one of the things you look at in a business, and since we're talking about applying our investing strategies, treating it as a business, one of the things I always look at is what is your business cycle? So for example, I always remember in retail that, you had a cycle. You always knew when the holiday seasons were coming up and you planned accordingly. Back to school sales, summer, the 4 seasons were obviously summer, spring, fall, winter, etc. And you planned accordingly because your customers acted different at different times and they want different things at different times. So what I'm hearing you saying is if we apply that same concept, you're applying the same concept, but you're looking at it from which strategies work at a different time based on what the needs are of the market and also what the economics provides an opportunity for or takes opportunities away from so that you can plan accordingly. Is that what I'm hearing?
Yeah. Go ahead, Corey.
I was just going to say that the market is always going to win. The market is massive. We're talking about billions and trillions of dollars. And too often people will say, hey, I think this is what would work right now. No, like you should just look at the data, look at the trends, talk to other people, get into rooms like this, whether they're virtual or live, and find out what's actually working. And don't try to go against the trend. If you've ever been in the ocean with big waves, you can't fight a wave, you can't fight a trend, you can't fight a market. So they're always going to win, and there's opportunity in every single market here as well, for sure. So if you look at what's working right now as we are kind of going into, from recession to recovery, we got single family properties, we have wholesaling, we have rent to own, we have private lending. And there's also other things that you can do to optimize your portfolio. Maybe we'll chat a little bit about that here today too. But if you don't necessarily think it's, you're ready to buy right now, you can always optimize what you have so that it's actually just a lot more profitable. Like we put some of our regular rentals, if it's one of our nicest units, we're going to try this as a furnished rental. And it's been going really well. And we market it well. We've got a great network, and we've been actually doing that for 10 years now. So we've got about 50, and they work really well. If it wasn't for that, I'd be in a lot different financial position. That's for sure with our holdings.
Got it. Yeah. And I think, I can't remember if it was Corey or Danielle, but like there's a lot of shiny objects in real estate too. So one of my philosophies, because of just from making mistakes early on, has been just hyper focusing in a strategy. So I think it's important to understand like these are guidelines. And one of my focus strategies has been rent to own. And when I mastered that strategy with Jason and actually built a business around it, then I was able to venture more into the multifamily space, doing the burr space. And I not just do one strategy or two strategies, I guess, but I only do it in specific, like for my multifamily, they're only located in Sudbury. So like to Danielle's comment, like it's very, very difficult to be the master of multiple different markets and build different teams in multiple different markets and handle the back end and the logistics. So it's kind of been my philosophy that I literally invest in one market. And that's like that. It's better to be a king of one market than a peasant of many, right?
Yeah.
So and you saw so many people make these mistakes and investing all these different markets, and like what happened, right? It's way too complex. It definitely can be done with the right team, but that's just kind of my 2 cents as being pick one of these strategies and do it for years. Don't just do it for 3 or 4 months, 5 months, 6 months, and then decide, oh, it's too hard, I'm going to do the next strategy. Just stick with it, and that's how you're going to become successful. And even though there's different recommendations in these market cycles, I just do burrs all the time. You know what I mean? And like, yeah, some are going to work more than others, but like just being able to execute the strategy better than others is what's going to really help out. So, that's kind of my 2 cents on that, but
Very true.
Yeah,
Very
and I
true.
like what you said there with finding a market. Everybody gets so with what Corey said. I mean, there's 16 strategies here that we've listed for you guys. 16. And this is what we need to cover with because everybody wants to do everything. So we have to cover that with our students. And we have to go through and this is what we're doing right now. This month is covering strategy. And so like we go through with the pros, the cons of each strategy, why you should do it. And everybody, like when you go into these real estate rooms, which is great because you're getting lots of information, but it's so hard because you get pulled in so many different directions. And it's that shiny squirrel, a shiny object, right? And you just want to chase the squirrel. So it's really tough to really narrow down. And I call it the real estate haze. When you're just starting out, it's the real estate haze. And everybody says diversify, diversify, diversify. So like, okay, well, I got to go in multiple markets. Well, no, like real estate is a slow game. You said it earlier, Zach, it is a marathon. So get to know a strategy, practice it, get really good at it, and then you can set it up, build systems around it, and then maybe plug those systems into a new market. And then you go into another market, or you get it going in the market you're in, and then you want to do a different strategy in that market to diversify. So then you can have the same market, different strategy to diversify a little bit. So, there's different ways you can do it, but it is a little bit slower than you're going to do in the average, when you're trying to diversify, because real estate investing is a slower game. It just really is. And you got to go slow and steady. This is slow and steady wins the game here, guys.
yeah. And just one more comment on that before we move ahead. It's like, if you're going to be the active partner and you want to really strategically build wealth and get your hands dirty, that's where we're suggesting, I would say, all of us, like, to be hyper focused.
Yeah.
But if you're just in like a wealth maintenance mode, like, and you have, you just want to be passive, then it could make sense, guys, to just, plug all your money in all these different 16 strategies just to try to maintain your wealth. But if you're really trying to grow and get it to the next level and be the active partner, you definitely want to pick one and just go, focus all your attention and energy on that strategy.
Yeah, and that was one comment I was going to make there with your comment, is what you're referring to is when you're the active partner and you're doing the work, you definitely want to laser focus. If you're the passive partner, then you want to make sure that the active partner in that project is laser focusing. Because the last thing you want is personal opinion, maybe people disagree with me, last thing you want is the partner with someone who has the squirrel effect, because that's just like throwing money down the garbage chute, right? I do have a question though, and I'm pretty sure a lot of people are probably thinking this. So I'm wondering, based on where we're at today, so I'm going to put that slide back up. With where we are today, I'm not sure why, but I lost the screen. I got a big picture in my head. Hopefully it comes up. There we go. What would you recommend? Like with today's obviously tomorrow this might change, next week might change. What would be your recommendation to a new student or someone who's looking to capitalize on these 4 quadrants and where we're going into? What would your recommendation be?
You want to start it off, Corey, or you want me to go?
Well, I think what a lot of people have been doing right now is they've been sitting on cash or they've been building up cash. And, if they've been in a situation where they bought into a strategy or a city or a piece of property that didn't work for them, rightfully so, like typically if you got burned by the stove, you're going to be a little bit hesitant when you touch the stove, but you kind of need the stove to cook food and to be able to survive and to thrive. So I think just by banking up cash and, even leveling up their knowledge base is very important too. Like we talked about risk and how to mitigate risk, and education can never be taken away from you unless there's that thing from the Men in Black that'll wipe out your brain. I think this is a great time to be really leveling up your knowledge and also working on your skills, like, working on things like raising capital, negotiation, how to manage construction sites, like getting in the trenches and actually learning the craft and the trade is very important for sure. But what should people be getting ready for here? Guys, like, if you think about who's going to be needing to sell properties here coming up, it's going to be people that maybe were just dabbling as, property owners, and it just isn't their thing right now. They never really went all in on it because they didn't treat it like a business, like what we were talking about. And they can hold on for 10 months, 20 months, if it's negative cash flowing, if it's just not working out. But at a certain point, the rubber band is stretching and stretching, and it's going to snap, and they're going to just have to sell. And unfortunately, they're selling at the wrong time. They're selling at a time where they should be holding, because the next uptick is going to be working in their favors, right? So I think there's going to be a lot of strategies. Like if you look at the recovery phase here, duplexes, multis, flipping, burning, wholesaling, student rentals. There's been a lot of students going back to school right now, not just students, but just everyday common folk that got laid off, because that's what's happening these days. And they feel like their ticket back into the job market is to go get more degrees and more education, which that might work for them or some people, but the universities love it. People that have the student housing love it. And I think we might have lost the screen share there, but so student housing can work really well right now.
Excellent. And I hope I'm not putting you on the spot. Oh, sorry. Go ahead, Danielle.
Yeah, just to piggyback on that. I mean, if you look at the graphic that we created here, and if you think of where are we in the cycle and where are we going? So if we're in that recessionary state right now at the bottom, and we know interest rates, they're predicting interest rates. We don't know, I shouldn't say that, but they're predicting interest rates are going to start dropping and quite significantly. And so now we're kind of going from that recessionary state into the recovery phase. And so ultimately what you want to do is you want to be ready for that. Now, in this recessionary state, we've been in this for nearly 24 months now, just over 24 months. And what we were telling people is like, okay, hold off. There was a lot of uncertainty in the market. We knew interest rates were going up. We didn't know when it was going to stop. So it was like, hold off right now. Make sure you look at your portfolios, stabilize what you have, get rid of the dead weight, analyze what you have. And that's what I did with my portfolio in 2022. And then do some private lending. If you have some cash, do some private lending. But now we're kind of going out of that recessionary state and we're getting into the recovery state. And so if we're going into that recovery state and you start looking at what works in that phase, now confidence is going to start coming back into the market. Rates are going to start to drop. The property prices are going to start going up because demand is going to start increasing. People are going to start going out there and buying properties and moving. Like even tenants haven't been moving. Like if you want to put tenants into a vacant unit and fill a vacancy, it's taking longer because tenants aren't moving because there's so much uncertainty and fear in the market right now. But if you look at this graphic on the right side of the graphic, when things start tightening up, the banks start tightening up, interest rates start going up, tenancies, vacancies start going up. And then all of a sudden, like that's a very scarcity mindset in the market. Now we're going into that recovery state, and that's going to go into the expansion phase. So, builders are going to start building. There's going to be more units. There's going to be more money in the market. And what happens at that point is there's more confidence. There's more money. So people are now buying, right? And so getting ahead of the game is start looking at what's working for that recovery into the expansion phase. That's where you're going to start making some money. So you can get back into flips. You can get back into BRRRRs. You can start doing conversions. What's important right now, because we're just at that cusp and, it's still a fragile economy. What I would say is always make sure that you have your numbers conservative and that you have a buffer in case it turns. Because if something happens that all of a sudden inflation starts going up again, well, then those rates are going to start going up again to bring that back down. So you want to make sure that you're prepared for that, and don't put all of your cash, because we're still in a little bit uncertainty. So don't invest all of your cash. Do not over leverage. By the way, we haven't talked about this, but over leveraging is what caused a lot of people to fail in 2022. And so always make sure that you have a stable portfolio. If it's your first flip, then obviously it's just one. But if you have a portfolio, don't have 50% of your portfolio under construction. So try to balance that out a little bit, right? Don't over leverage yourself. Look at your portfolio as a whole, see where you're at, and see, you know, what the loan to value is over your entire portfolio in case something happens. Anyhow, I digress. So looking at this graphic though, will really help you identify kind of what strategies to consider, knowing that we're kind of going into that recovery state.
Okay. Thank you. Appreciate that. And I do have a question from my Facebook group, but before I do it, I think I saw a QR code there. So if you have a gift for our viewers, I'll happily encourage that. Hopefully I didn't just put you on the spot. But, well, I just wanted to put that out there. But from our actually, you want to tell us about this,
Jason,
first?
yeah. This is just so, because the graphics are great visuals for people to go back and use as a reference. And every time we do something like this, we always get hammered with, hey, can you send us the graphics? Can you send us the graphics? So, or send us the slides, whatever it is. So we're just sending you our whole slide deck. So if you want the slides with the graphics, you can just scan the QR code. You'll have to put in your information, obviously, your name and your email, so that we can email it to you, but it'll hit your inbox right away.
Excellent. And for those of you who are watching this on your phone, you can take a screenshot, would be what I'd recommend right now. Take a screenshot, and either if you're advanced enough, there's a way to actually get the QR code off your phone even in a screenshot. If you're not, use someone else's phone. But if you take that screenshot right now, if you're on mobile, you can still get this download at a later date for you.
You could screenshot it and then have someone else screenshot it, and then you do you scan it from their phone. There you go.
Exactly. That's what I just think, because I was looking at my phone. I'm like, oh, wait a minute. I can't QR code this because I'm on my phone. So yeah, there's always a way. It's just like in real estate or anything else in life, right? Where there's a will, there's a way. With that being said, before we move on to the next piece, there was a question on Facebook that related to that last slide. We'll leave this one up for a few more moments, though. But what economic indicators, Stefan was asking, what economic indicators are most important to confirm we're exiting the recession state? Any short comments on that?
Corey loves the economy.
Yeah, go back a few slides where it showed the 4 columns, Corey.
For sure. I wouldn't say I love the economy, but I mean, the economy is what, if you have an understanding of it, or if you follow it a little bit, then this is how we all make money, right? But ultimately, whatever the government's doing right now, they said they weren't actually going to raise interest rates aggressively, right? And they did. And now the interest rates are coming down slowly. So that just goes to show, I think there was an image posted by Daniel Foch, who's going to be talking at our next event next week, that they're looking to bring interest rates down by like maybe as much as 2.5% in the next couple of years. You know, what kind of an economy needs to be dropped that quick? It's, the economy is not doing that great, but, you want to, and unfortunately, a lot of the data that we get is a little bit old, but, if you have a good realtor in your network that can get you data on the city that you like to farm in, that's very important, because that data is usually only a month old. Employment data is very important. Seeing what some of the bigger companies are doing as well. Like there's a lot of layoffs right now. They're cutting back on marketing, but, and even then it's like, how are we actually getting the data, or is it any of it manipulated too? Right. So I think you just really, we talked a lot about being the master of your area and just really knowing what's happening in the city that you work in, or maybe if you're working in a few cities, it's important to be talking to your power team members, because they're actually interacting with dozens of people a day. You can tap into their knowledge. Like what's the mortgage broker saying? Like buy your mortgage broker a coffee every couple of weeks, or at least once a month, to understand what's going on, right? Call your realtor on a regular basis. They're not crazy run off their feet like they were during COVID anymore, right? So just stay in touch with these people, because they actually got the finger on the pulse, and you can tap into their information too. So those are a couple indicators. I know there was also a question here on like, what is new construction costs doing these days? New construction costs, from my understanding, is actually fairly expensive, just because material costs still haven't come down a lot, and builders aren't building a lot. So for them to actually get out there and build you something, if this is like a new home build, they want to be taken care of to do that, right? So people that are doing bigger, new build projects like that, because new construction's really slowed down, are typically people that aren't as worried about the price point. They just want what they want and they can afford it. So, but I don't do a lot of new construction, so I'm not really following that metric. But you're probably like $300 a square foot right now, depending if you factor in land or not.
Cool. Yeah, I mean, one more quick update and we'll move on. But I think for me, looking at the recession, like Corey was saying, is what's going on in your specific market that you're focusing on. I think as we kind of come out of the recession, you'll notice more of like a balance in the market, right? So the recession, we're just like prices are going down, no one's making offers, lots of price reductions. And then when we kind of see more in the recovery, I think it's most likely getting into not a completely balanced market, but there is some buyers coming out of the woods. There's offers, there's stuff transacting. Days on market is something that we're always looking at, right? What's the average days on market,
Yes.
and things like that. So hopefully that helps, Stefan.
Well, and I think too, Zach, just to add to that, there's other economic indicators too that you want to look at, when insolvency goes down, right? So then there's people that are actually living within their means. When you have businesses that are hiring again, so unemployment rate starts going down. If businesses are putting money into marketing again, that means they're actually making money and they're not scaling back because there's nobody buying their service or their product, right? The other thing is, so funny enough, I have a friend who's also a real estate investor, and he has a friend who's a manager at a car dealership. And so he always calls the guy at the car dealership to find out what's going on there, because it's all about discretionary spending. When we come out of a recession, guys, it's because there's more money in the market and there's more confidence and people are starting to spend more again. And that's what starts driving rates. I mean, that's supply and demand, not rates, sorry, the prices, the property values. So it's all about supply and demand. So when there's more demand, the rates go up, right? The prices go up, rather. I keep saying rates, I apologize. The prices go up. And so just pay attention to when there's more confidence in the market, inflation is down. If the government's printing money, guys, that's problematic because that contributes to inflation. And so we want to make sure that there's not too much printing money, because that's always dangerous. So that's what happened in COVID. But yeah, so interest rates going down, discretionary spending going up. Businesses, through 2022 into 2023, were cutting their job force, and that was a major contributor to where we are now. So yeah, those are things that you want to look at. I get my nails done, I go tanning. I always ask the businesses, like, how are you doing? How's business? Right now, the nail salon, I was just there on Monday. And I asked her, I said, how was business? Because I know Monday, Tuesday, Wednesday seems really slow. First couple of weeks in September is always slow after in the service industry. So after the kids go back to school and they have to spend a lot of money on school supplies and school clothes and all that stuff. And she's like, business is booming right now. And so she was busy Monday, Tuesday, Wednesday, she was booked. And I went, okay, all right. So but take that with a grain of salt. Don't just go off one factor that you see is going well. Then look for other factors and layer it on. So if there's a bunch of different things that are kind of going our way, then that's a good sign. And then, get out there. If you're talking to realtors, you're walking the properties and you're talking to different realtors, ask them, what are they seeing? Like, are people putting in offers, or are they just shopping, not pulling the trigger? Are banks lending? Are things getting approved? So those are all like positive signs. So you want to look for positive signals, but don't just look at one or two things. You want to look kind of broadly to really see what's going on out there.
Excellent.
Excellent.
Go ahead.
Yeah, so I mean, we're coming up on the hour, guys. So as we're getting through this, any other questions that are coming through the chat box, please just drop them in the chat box. We'll do our best to get to each and every one. Before we go, though, I definitely want to touch on maybe some mindset and then maybe even talk about some networking things. I think we got some networking things coming up I'm super excited about. Maybe go play some golf.
Golf, networking.
Yeah, but what
back.
Yeah, let's go, Corey, because I think I want to hear from you on this. Like, with your professional athlete, like, talk to us about mindset. Like, I think it's such a big step. We talk about like looking at the real estate market and the strategies to choose, but in my opinion, I think mindset is probably number one. Like, getting your mindset right and setting those goals, and talk to us a little bit about that. Like, how does someone do that as a beginner investor, or maybe even a sophisticated investor? Like, how do we get our mindset to the next level? Like, how do we do that and see that vision for our businesses and take us there?
Yeah, you just go to the grocery store and you buy a package of positive mindset and you just take a dose every single day. No, if it was only that easy, right?
Do you have a QR
Um,
code for that one too, or?
Exactly. It really is a habit, gang, and it's one of those things where you can always go find what's wrong in life, but you can also go find what's still great in life. And when you spend time on yourself, like the people that aren't going to be as impacted by any cycle, any part of the cycle, are people that actually work on their craft and their skill the most. They might slow down a little bit, but frankly, we all need a little bit of a break and it's all good. So when you know that you're always trying to get 1% better every single day, and you can go to sleep at night going, hey, I may not have gotten everything done that I wanted to get done today, but I still got quite a few things done in a forward motion and I'm making progress. Because what's the simplest definition of success? It is actually forward progress. And too many people want to get something right away, but then they really underestimate what they can do, not just in a year, but like 3 years, 5 years. It really is playing the long game. And your mindset is also, how you do your self-talk. What are you saying to yourself on a daily basis? Are you beating yourself up? There's probably a lot of A-type personalities on this call. If you're not, then you probably know some. And we're already going to be hard enough on ourselves. We don't need to then stack on top of that negative self-talk. You got to be your own biggest fan. And if you're having a hard time doing that, then you got to get around other people that can be a fan of yours, whether it's a tight network, because lots of times your closest friends from high school, college, university may not really understand what you do. They might not ever understand what you do. Some of my family still doesn't fully grasp everything that I do. But you should get yourself a network of people that do, and they can support and encourage you and lift you up when things aren't going the way that you want them to, right? Even just somebody to vent to, because, frankly, you're like, I don't know, your spouse or significant other or your brothers, sisters, mothers, they don't want to hear all the stuff that you're going through, but people like us on this call here understand what you're going through, right? And we can help to offer you. Lots of times it's just a resource or another new power team member that can really totally change things around 180 degrees and get you back on track, because that's what people need right now. And great mortgage brokers can help get your mortgages back on track. I was just looking at some of them on Threads this morning and some of the creative things that they're doing with mortgages based on timing and stuff like that. So yeah, it just comes down to, it's a practice, and the more you practice it, the better you'll be at it, right? So I've just learned to give myself some grace, or a lot of grace, every single day, because at the end of the day, life's too short, and you don't need to stack extra stress on top of things, but you also can't just sit there and do nothing. So I could talk for hours about this sort of stuff. We do workshops on this sort of thing. In our Inner Circle program, we literally talked about mindset for 2 weeks straight before we even moved on. And even then we dripped that throughout because it's so important. It really is the foundation that everything else stacks on top of, right? So
if I was to take what you're saying, because I love mindset, and Zach's probably knows I could go on a tangent right now, so I'll stop there. Won't do that. But if I'm hearing what you're saying, it's like we all have it. We know we all have it. If you don't have it, then look to the person left here, because they do. But that shouldn't stop you from doing it anyways. One of my favorite mentors is Blair Singer, and he often said that the difference between where you want to go and what it's going to take to get there, or the length of time it's going to take to get there, is about 6 inches. Right? It's just between your ears. And if you can conquer that, and to be honest, it's not about obliteration. It's not going to go away, but you can master it with daily exercise, with daily focus, with daily mindset, reminding yourself, surrounding yourself with the right people. There's a million tools out there. So if you're one of the ones that suffer, one, know you're not alone. Two, there's probably someone else who's done what you want to do. So if you're really stuck, go get a coach, go get a mentor. All the greats have 1, 2, 13 different high-level coaches or mentors in all the different areas of their life. Because let's be honest, you can't be an expert at everything. So if you're stuck in your head or you're stuck in your way, well, frig, get up, go take some action, find the person who can help get you out of that way, or can help point you in the right direction. And if there isn't anyone, get up, take some action, and you'll be surprised at what that will show you anyways. And if you're really, really stuck, well, there's a lot of other ways to get help with that too, because let's not discourage mental health. Obviously, it's a real thing, but it shouldn't be the obstacle or the excuse. You can have it, you can face it, you can deal with it, and you can find ways to help yourself, or you can find ways to justify sitting on the couch and watching more Netflix. That's my personal perspective on it.
So
Yeah.
Jason, I think it might be the distance that you're talking about for Zach might be 8 inches, not 6. I'm just saying. But you know what? That's just because he's got such a lot of great stuff up in his head. So, but I just, yeah, Zach, do we have another hour? Mindset. You're gonna bring up mindset at the top of the hour? Come on. Like this is my absolute fave. You were gonna say something,
Yeah.
so then I'll let you go and then I'll jump in.
Oh, well, we might have to do another event on mindset. Yeah, maybe we can plan that one for the new year. That would be a good time to do it.
If you want
I mean,
mindset, put mindset in the comments below.
Yeah, put mine. Yeah, exactly. I just wanted to piggyback off what Corey was saying, because I think like I'm definitely a type A personality. I think a lot of people are here, and I think maybe selfishly sometimes we do these events so that, you know, Jason and I can get to the next level as well. And you pointed out the hardest thing is like at this personality is like, you know, you start your day with like all these to-dos, let's say, and you know, you're just always on yourself and you really never stop to just smell the flowers or see the progress, right? One of the, I guess, hacks that I'm really trying to do is just like a simple journal that, well, it's a massive book, but just trying to like document, like, you know, on a daily basis, even my to-dos, and, you know, get that dopamine rush, crossing stuff out, and then being able to flip back, like to see what you've accomplished in that week and in that quarter. That's been really helpful for myself, because I was definitely the person that was never celebrating, and I'm trying to get better at that. So I'm glad that you mentioned that, Corey, because I think it's something that we can all improve on for sure. Life is too short. And with that, Danielle, I'll hand it to you. Tell us about mindset. Tell us about the gift that you have, and then we'll wrap up. And if you guys want to hear about a mindset event, type mindset in the chat box. We have not covered that topic. That could actually be done on one of our master classes as well. So that'd be great.
Yeah, I'm seeing mindset all over the chat right now. So yeah, definitely. I think people, and the question was that you had, Zach, is like, how do you change your mindset? Like, how do you shift your mindset? And it's great to say, yeah, go out, you know, take action and just do this and do that, get off the couch and don't be a victim and all of that. But really, it comes down to dialing in what you're feeding your brain, because it's not easy to go from being a scarcity person to an abundant person. And I always tell people, go online, type in scarcity versus mindset in Google, go to images, and then just read and see where you identify. And if you identify on the scarcity side, then you have to start shifting on the abundance side. And by doing that, it has to be a conscious effort until you start rewiring yourself to be a default. So one of the things that I did, and here's a bomb for you guys. So Jason, I love that you brought in mental health, because that's just an added layer of difficulty for people who are in that victim mode, because there could be some mental health issues there as well. And I said mental health, there's a bomb, but look at me. Right? You have to learn to manage, and you have to learn to work with what you got. And one of the things that I did was Napoleon Hill has, it was Napoleon Hill. They used to, I don't know if they still do it, but when I was starting, I was in guys, listen, in 2013, if I told you what I was going through in my life, I mean, I couldn't even get out of bed. It was terrible. And so one of the things my coach told me, and I had a coach, by the way. So actually I had 2 coaches at the time. So one of my coaches said, you know what, Danielle, I can't tell you to do all this stuff. This is what I want you to do. I want you to go to Napoleon Hill's website, download their daily thought of the day, I think it was called. And it was just a blast of positive energy. And so I used to read that every morning. So what you feed your brain matters, guys. If you're that negative person and you're clicking on social media and all the negative comments, and I don't want to bring politics into this, but let's talk about Donald Trump for just a second. If you're going to like click on all of the garbage that you're going to read, right? And that's what's feeding your brain. That's what you're going to exude out, because we tend to adapt to all of the stuff that we're taking in. So you want to make sure you feed your brain with positive thoughts and positive energy. I also, to this day, I have an app on my phone, and I do pay for it. It's a paid app that is positive. It's called Motivation. So if you want to look it up, it's called Motivation. And I mean, the cost for the value I get for it is nothing. But I see every day at 9 a.m. a pop up on my phone, and it's just a blast of positive energy. And I click on like on the ones that I like. And those are the ones that I need, the ones that I like, that I resonate with. And the algorithm knows what I need. And every morning it just pops up something that resonates with me. And so that's really important. And to tie it into the networking events, Zach, it's really important because you mentioned your friends. So you got to be able to put into different silos the different people in your life. Your family may not be the most positive people that you really want to be hanging out with and sharing ideas with. Your school friends may not be that either. Like if you're at my age, my school friends, that's where we go and we reminisce. My son, he's in college. His school friends, he plays like video games with, right? But he segments. You got to put people into silos. Come out to these networking events. Shake the hands of the people that are who you want to become. Shake the hands of the people you want to become. So if there's somebody that, you're like, wow, I really respect that person and I love how they think, get to know that person and hang out with those people. They say you're the sum of the 5 people you spend the most time with. So limit the amount of negative energy that you're around so that you can get out of that mindset and shift into a more positive, abundant mindset. Sorry, I'm telling you, at 9 o'clock, what? Like, how long are we going?
You're just dropping bombs.
I love
Love it.
mindset. This is my thing. This is my jam. Yeah. So, and it was so massive for me, Zach. Changed my life. I came out of a bad relationship that wasn't nurturing me, was suffocating me. And, it changed my life. Changed my life. So if you really want to grow, first thing you need to do is you need to be open to it. Period. It's not going to happen unless you say, I'm open to change. That's it. And the biggest thing about that, so people are scared because change is very scary because it's not what we're accustomed to, which is why abused women will go from one abusive relationship to another, because you tend to stay within your comfort zone. Change means expanding your comfort zone, and it's very uncomfortable. So get comfortable getting uncomfortable and stretch yourself a little bit, right? And just because you're trying out something new doesn't mean you're going to stay stuck there. You can just try it out. If it doesn't work out for you, you can go back to where you were. So nothing is set in stone. And I always just encourage people, like, stretch out a little bit. And if it's uncomfortable, you can go back. And the next time you go out, it's going to be even easier. And so just keep practicing that, right? And eventually you'll start seeing, and just feed your brain with positive stuff. Like, read positive things, get off social media that's all negative. If something is making you feel bad about yourself because you see your best friend on vacation and spending lots of money and driving a nice car, stop following that person. Like, just get rid of the stuff that's kind of bringing you down. There's no need for it. None.
So I know Zach knows me well enough to know I'm jittering in my seat right now wanting to comment. So Zach, I promise I'll keep this to 30 seconds. I just want to comment on 3 things that's related to what you just said, Danielle. 1, I've got 3 books beside me. You can't see them. 1, obviously, Financial Literacy. Everybody knows Rich Dad, Poor Dad. My favorite second favorite Napoleon Hill book, Law of Success. I personally find this to be the success book for Think and Grow Rich. If you like Think and Grow Rich, this big mother trucker here will tell you how to do it. And my absolute favorite book of all time, I've read it 20 times, maybe more, is an unknown book by my mentor, Blair Singer, Little Voice Mastery. It's 40 some odd techniques that if you're stuck, 40 techniques to master that little voice. Like, I won't go into it, but Zach knows little voice is one of those things that I struggle with. And so having more and more techniques or tools in my tool belt is a big key. So I'd highly recommend, like, if you're stuck, if positivity doesn't work, because I believe that's a beautiful thing. For me, my head was too good at avoiding it. This one, however, gave me a number of tools to get out of it. I think I went 45 seconds. So I'm going to stop there so I don't go on another.
Oh,
Jason, stop, because you're saying a little voice in your head and I'm like, oh, I just want to go. Okay, yeah, no, we totally need to do another mindset talk, or another talk on mindset, Zach, because this is I think we could just have a lot of fun with it.
Yeah. Tell us about your networking event, and then tell us how our viewers can maybe follow you on social.
Okay, so it's easy enough. If you're on your phone, take a screenshot. Or you can go to Eventbrite. At Eventbrite, we have, that's where the link will take you to. That's our page. Has all the details. It's upcoming the September 18th. It's up by the airport, the Toronto airport. So if you're on the east side of the city, the west side of the city, or north of the city, you're going to be able to come down. And the beauty of it is you won't be going with rush hour traffic unless you're downtown Toronto. You'll be going against traffic, so it should be relatively okay. But yeah, September 18th at 6:30. Doors open at 5:30, guys. We really highly encourage networking. And yeah, it's just a beautiful room with beautiful people, real estate investors, new and experienced alike. And the quality of the people, like the one thing that I'm the most proud of, and I think Corey can attest to this as well, is the quality of the people that are in the room are action takers. Like it's not just people kicking the can and just wanting to do it but not doing it. There is a cost to coming, and I think that filters out a lot of people who aren't really serious about doing this. But there's a code here for 25% off. So use the code SSC25. That'll give you 25% off the ticket price. It's good until Saturday night. So it's only good for the next 24 hours or 48 hours, guys. So get your ticket. We want action takers, which is why we're only doing 48 hours. But yeah, come and network. We've got Nick Regina, who's just been killing it. This guy has such a fun story. Anyway, he used to have 7 nightclubs. There's 7 businesses, and I think it was 9 nightclubs. 7 of them, or 6 or 7 of them, were in downtown Toronto. And he was a promoter. He's done like people like Drake, and he's just got such a phenomenal story. He's building a brand new business right now in real estate. And shift is like, talk about mindset. His wife got pregnant, and then he's like, man, this lifestyle is not going to work anymore. So he completely shifted. And now he's a family man, and he's going to drop some amazing bombs for us. We got Daniel Foch, a lot of questions on the economy. He's your man. We've had him at our event multiple times. Love Daniel. He's just amazing. And yeah, so we're going to do an economic update with Daniel. We're going to do a real estate update with Tristan Ritchie, and we're going to do a financial update with Nick Regina's partner, who's Michael Scoro. So we've got a fantastic lineup, and the event goes till about the presentations go from 6:30 to about 8:30 ish, 8:45, and then we do an hour and a half of networking. And networking is just so critical in our industry. I built my business networking, so did Corey, and we just want to. The reason why we do these rooms is so that we can offer that to other people in our community as well, because we just know the power of it. Like it's so. And you've been in our rooms, Zach, so you've seen the people that are there.
Oh yeah, I'm not gonna lie. The last time I was at your event, I ended up doing business with somebody there very shortly after. So it's definitely the place to be. And yeah, unfortunately I can't make this one, but definitely guys, get your ticket, sign up. And you guys do this, I think, is it monthly, quarterly? So I'm sure we can kind of share as the other events coming up. But yeah, really appreciate all the bombs being dropped, Danielle and Corey. It was awesome to have you on the channel. And we'll definitely set a date in stone to do a mindset event, maybe in January. That seems to be like a good time where everyone's mindset is like ready to be changed. And then we'll maybe give you guys strategies how to keep it for the whole year, not just like 7 days. So yeah, any final comments? Any final comments, Corey, Danielle?
Well, I just want to thank you, Zach. You've always been a great supporter of, things that we've done, the networks that we've built and things of that nature. And I met you at a, I guess I'll call it like a networking event. It was a real estate conference. And through you, we've met Jason here too. So it just goes to show, gang, that you won't just get cold called in life. Like someone's not just going to call you up and said, hey, you seem to be doing great things. You want to be on my podcast. You want to speak. It's like, no, you got to get into these rooms and actually meet people. Nothing beats face-to-face, shaking hands, real life conversations, working through challenges, sharing wins together in a room, hearing people's stories, seeing keynote speakers. I've been seeing keynote speakers for decades, and you can't just get a little bit of motivation once in a while. Like we need constant ways to fill up our positivity and our mindset and everything else, right? So that's going to happen by coming out into rooms like this. So we look forward to seeing some of you out there next week.
And you said it before. I want to say, like, there's a saying that Corey said to me a while ago, and it's stuck with me. He goes, I've never done business with somebody I didn't shake their hands with first. And even now, after COVID, we're more tech savvy. We're doing a lot of this stuff online, but it's really hard to pull the trigger and start working with somebody until you've actually physically met them. So get into the rooms. And Your story, Zach, is a story I hear all the time where people met in our room and they're now doing business. And that's just a common story because you got to meet people. And it's just so rare now that when you are there in person, the opportunities are just in front of you. Just saying.
100%.
Yeah, people don't think it's part of their job as a real estate investor, but my portfolio went up exponentially when I was like, you know what, I'm going to be driving a couple hours every month into the GTA to go to a networking event or two, and that was like 8 or 9 years ago. So it's a life changer game.
Excellent.
Love it, love it.
Well, thank you so
All
much,
right,
everybody.
guys. Well,
go ahead.
yeah, thanks so much, guys. We will catch you on the next call. Stay tuned for, I think we have another masterclass coming up next week. And Corey, Danielle, pleasure to host you guys, and we'll see you on the next call.
Yeah, and if you
Bye.
haven't done so already,
everyone.
be sure to join the Real Estate Hub where you'll get more videos and photos and value just like this. Be sure to like, subscribe, follow, share. And if you haven't done so already, I hope you got that QR code.